Good Tuesday morning, Market Chameleons and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show live every trading day, except the days where we got something else going on. And here he is, the main man, Dimitri Pargamonik. How you doing, D?
Good morning, Will. How are you?
Great. Had a great webinar with Felix last night. It was really great to hear from him. Everyone
very nice.
Really likes Felix. I will remember to put that YouTube link in the chat for anyone who missed it last night. But you want to start with the disclaimer?
Yep. So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer. And with that, let me share my screen. If you guys have any questions, please put those questions on a live chat on YouTube. Will's watching it. He'll read them back to me. If you guys, anybody wants to come on a show and ask a question live, we also provide a link to Zoom. Click on that link, takes you over to Zoom. Once you get to Zoom, there's a button, raise your hand. Click on that. You don't have to turn on your video camera, but we'll be able to hear you. And then you can guide us to where you're looking at, ask your questions that way. So 2 ways to ask those questions. While we're waiting for any questions to come in, we'll take a look at the pre-market report. Maybe take a look at, we'll take a look at the ETF Screener and maybe another report that's relative performance. So I'll try to cover that. If we do have questions that come in, I'll take those. Sound good, Will?
Perfect.
All right, so pre-market report, these are stocks trading in pre-market hours. We have a list of the most active stocks, a list of our biggest percentage gainers and biggest percentage decliners. I see 50 stocks made our percentage gainers list, 47 on the decliners. Kind of even there, maybe slightly more, a little bit more bullish bias at the open. Let's take a look at S&P 500 stocks. I'm going to clear out this list and filter it down to only companies that are in the S&P 500. And to do that, I'm going to use this filter here in ETF, drop it down. I'm going to select SPY, which is the S&P 500 ETF. And now we see that these are stocks that are holdings in SPY, which are the S&P 500 constituents. And we've got 7 stocks on a percentage gainers list, 7 on the decliners. So from this perspective, pretty even. I think General Motors, couple of these, as a note, these are the percentage gainers. You can see this list. These are the symbols. So GM, General Motors, UPS, Coca-Cola, GE. And I'm coming down here. This is what they're moving in the pre-markets. General Motors up 3.8%, UPS up 2.7%, Coca-Cola up 2.1%. And this alert, little e, is letting us know that they just reported earnings either today, just today before the market is open. We're not open yet. They just reported earnings. So the stocks are trading in pre-market hours, reacting to earnings and whatever the management could be saying regarding their future outlook. And if you hover over that N, that just allows you to see the headline news. Okay, and you could click on it to read more. So those are reacting to earnings. We've got a couple ones down here, E's, that are reacting negatively to earnings. What we could do, Will, is, well, I said I'd go to the ETF Screener, so let's do that if there are no questions.
All right, perfect.
Okay. Let's go here under Screeners, ETFs, and I wanted to bring this up. We did start talking about yesterday some of the things going on in China, and you know how politically things are starting to change there. It's moving more towards from less reformist, more like old communist leadership, kind of solidifying that leadership under one person.
Well,
And
it seems like the hardliners have basically taken every leadership position in the cabinet, is what they're saying.
Right, which politically and economically could have significant impact on that.
Yeah.
We also know that their economy, which has been booming for 20 years, their GDP has grown at a tremendous rate. They're second largest economy in the world right now. And one thing that they haven't experienced is a steep decline in the economy. And that steep decline will, at this point, impact, I think it will touch the world, right? Just like when if America feels a recession, it gets exported around the world. I think that will happen as well. We also have friction between US, China, Europe, with the situation in Taiwan, tariffs going on. And this story is not over, right? It's going to continue. But on over the weekend, there was more negative news, especially like you were saying, more hardliners there. A lot of people now supporting kind of one view, one vision. So let's take a look at what's going on with those ETFs that are Chinese-based ETFs. And I'm on an ETF screener here. I'm going to use this filter here in country. And let's take a look at China, right? So these are Chinese ETFs. And I think right now it is auto-sorted by the highest volume. So this is yesterday's volume in the ETFs. Top of the list, FXI, which is the Chinese large cap ETF. That was down 10% yesterday. And that's a pretty large move for an ETF, right? These are Chinese large cap ETFs. You got this one, KWEB, also trading yesterday 4 times its average daily volume. That was down 14%. This one is a leveraged bear. So this is 3 times. That's why this is up 30%. This one's basically working in reverse. When the stocks go down, this one goes up. If the stocks go up, this one goes down. So it's like one of those inverse leveraged products, 3 times 3. So that was up 30% yesterday on volume of 3.6 on 14 million shares, which is 3.6 times its average daily volume. And the options were also busy. Because
problem with those double bears, though, that pop profit, they're looking for a negative move, and it's the underlines. Right. You could be right on the move, but holding that thing could be a very big problem, right? There's they've got like some sort of negative decay on a lot of those products or something, don't they?
These leverage products have, and maybe they shouldn't even be. I don't even know if they should have them, because if you don't really understand them really well, it's a gambling mechanism, and it's almost like a one-day hedge. You could use it for not a long-term hold. None of these are really a long-term hold because they'll have a decay. And the other thing I think is that if it experiences a steep one-day decline, it could reach a point where they have to liquidate, right? It could go out of business, basically. And from a very big move. And that's happened, I think, with one of them. I forget which one. It was VIX related, and I don't remember if it was like a double long or a double short, but VIX itself is volatile, and it moved around so much that at one point it reached a point they had to liquidate the ETF. It basically was, that's it, it's done. You got to be careful with these. A lot of people who are trading them don't really realize how these instruments work. And you're absolutely right. Well, in the long term, it's not a buy and hold, right? So, in other words, in the long term, something you could have a stock that, or this ETF could climb and double, and you could have a double long, which could decline. They could move in opposite directions because of the path it takes. It's the volatility and the path it takes on its way up. You got to be careful with those. But just wanted to kind of bring you to these ETFs. We discussed them. That there is definitely right now a lot of risk in these companies that go beyond just earnings, right? It's not, we're not talking about just a recession and negative earnings, and that they might see demand decline for their products. There are other risks involved here, and those become political, trade, and what do you really own? That question is going to start coming up as well, because you own these ADRs and people buy them like they're common stock or common equity on the US stock exchange, but it's not really the same thing. And you cannot go out there and buy, let's say, all of these BABA ADRs and then claim, well, now I own bot. Like, you could go out and buy Twitter, right? Right now, Elon Musk, he could go out, buy all the Twitter shares, and he'll own Twitter and take it private, and that will be his company. That's not how ADRs work, right? And we've seen examples of that with the Russian ADRs. Those Russian ADRs, people own them. They went to zero. They basically got delisted, and the companies for those ADRs still exist. Those companies still operate, some probably making profits. They're making a product, they're making sales, they have employees, they have cash in the bank. All that is still happening in Russia with these companies, but what is your paper worth? And your paper here is worthless or zero, because you don't have any rights anymore to those earnings. If the government says you cannot export earnings, foreign person cannot own the company here, then all of a sudden that changes everything. And there's that risk there, right? There's that risk there, and it's a real risk because just in recent history that's happened. China, who knows? But I do think that something to be aware of.
I would say it's probably the market cap of these Chinese companies is probably 95% bigger than the Russian market. It would be if it went to zero, if the market cap of the US traded equities and European traded equities of Chinese companies went to zero, it would be a big issue.
Yeah, and their reporting is fuzzy, right?
Irrelevant of China invading Taiwan, and we take the same type of actions as a country that we did, and as a society, European society and America, the same type of steps we took against Russia for Ukraine. If it was the same, irrelevant of that happening, these companies, their reporting mechanisms, what you actually get with your ownership, it has been sketchy from the beginning and talked about, right? But they've been super promoted products by the investment bank, and it was very lucrative for them to promote and sell these products to investors.
People wanted to participate on the Chinese economic boom, and this is one way to tap into it. And by the way, at this point, a lot of U.S. companies are already entrenched in China. You're still participating in that Chinese economy already indirectly through companies that have operations there and investments there and so forth. But let's take a look at this FXI, Chinese large cap. You could see Alibaba, Tencent, don't know what this is, Chinese construction banks. And you get an idea of these are the companies that this is holding. These are top 10, 56% of the weighting is in the top 10 holdings right there. Keep in mind that there are more risks to this than I think only trying to project earnings. Right now in the S&P 500, that's really it's hard already to project earnings 1 quarter, 2 quarters, 3 quarters out. Raising interest rates makes it even that much harder because your models are going to be more volatile, and your good case scenario, bad case scenario keeps widening out. With this, you got extra risk now involved with these Chinese ADRs. Got 17. Let's see if I could go. If there are no questions, I'm going to go to another report. Look at relative performance. Okay, so these are outperforming stocks. And a lot of times when we look at stock valuation, volatility, whatever, any financial instruments, we can look at it from different perspectives, and a lot of times we do it from a relative basis. Okay, not just on its own, but how is it doing relative to a certain benchmark? And this one here is looking at stocks performance relative to the S&P 500. And it was filtered out because they met certain metrics that shows that their performance has been better than the rest of the market. Okay, and here are the different metrics that it's using. And in the first ones, it's looking at the most recent history. How did the stock do relative to S&P 500 in the last 7 days? Okay. Actually, let me see if it's 7 days or it starts 2 weeks. I think it does start. I think it does both. So let's start at the 2 weeks. You could see S&P 500 in the last 2 weeks up 5.2%. This one on the top, United Health Group, in the last 2 weeks up 8.6%.
Hey, D?
Yeah.
Rob is asking, could you please show your the click-throughs to get to where you are, the chart you're at now?
Yeah, so this is under stocks, market action, outperforming stocks.
Stocks, market action, outperforming stocks. Perfect.
On a 2 week basis, you can see that in the last 2 weeks, this has outperformed the S&P 500. The stock increased by 8.6%, S&P 500 5.2. That's over 3% better, 3.4%. In the last 3 months, what happened? S&P 500 down 3.7%, United Health Group up 4.2%. And in the last 6 months, half a year, S&P 500 down 10.3%, United Health Group up 4.6%. 3 months, 2 weeks, 3 months, 6 months. In the intermediate short term, it has been outperforming the rest of the market. Okay, the rest of the market, I mean S&P 500. We could also look a little bit in more detail day to day. Okay, so this is over a 2 week range, over a 3 month range, over a 6 month range. And you're really looking at 2 points, right? What is it today versus what is it 6 months ago? Down 10%, up 4.6. This is looking at 2 points. 3 months ago, where it is today, what is the difference? Okay, what about from day to day? And let's take a look at the most recent history, last 15 days. Okay, so these are 15 trading days. And how did it perform? Let's look at number of up days versus down days. S&P 500 in the last 15 days, it was up 40% of the days it was up, 60% it was low. Okay. Here we see United Health Group, that was up 73% of the days, versus 27% lower. From day to day, you could see now we're not looking at just 2 points, because when you're looking at 2 points, there could have been one massive day that took all these averages up, right? So that's why we're looking at these. So within that 6 months, if there was one big day that just took it up, 20%, and then it sat there, well, that could explain the differences here. So let's take a look at the most recent history and look at it from just day to day. What has it been doing? We could see S&P 500 up 40% of the days. These in here, as you could see, were up more than 40% of the days. Okay, so more days it had positive returns than the S&P 500. What about if we took the average daily return? So here, the average daily return of 0.3% in SPY, UNH is kind of even here at 1%. So this one, obviously, these are much better. Here, it's probably close. That's why it kind of made it. What about the standard deviations of the returns? So the standard deviation of the returns is how much variability. If on average, you could see that this has made, it was positive in the last 15 days. So on average, it made 0.3%. Okay, if we averaged out. In other words, if you reset if every day you reset your notional at risk to the same amount, okay, on average, it would make 0.3%. So if you started out at $1,000 and the stock went up, well, you would sell some to get back to $1,000. If you started at $1,000 and the stock went down, you'd have to buy more stock to get your risk back to, I'm risking $1,000, let's say, every day. Okay. If you did that on average, you made 0.3% in the last 15 days. Here it's close to 0. This is 1%, and so forth. And let's take a look at the variability. And the variability is on data from day to day, how much did that change? So if every day in the last 15 days you made 0.3%, every day you reset it, 0.3%, 0.3%, 0.3%, that means there's no standard deviation. It's always the same. There's no variability. Some days lost, some days you made more. It would be 0. But we see it's not 0. It's not exactly 0.3%, 0.3%, 0.3%. And you could see here that the standard deviation, 1.9%. So it's volatile, right? It could be up 2%, down 2%, even more. So a lot of variability, a lot of volatility in those daily returns around the average. Okay. So if we take the average return divided by the standard deviation, which is, on average, how much risk did we take for each unit of return? 17.1. Obviously, you want this to be higher than lower. The higher it is, the better, because you want this to be very low and this to be very high, right? You want your average return to be very high, your standard deviation to be very low. So here we could compare those metrics over here. So here, 55%, we could see here that your variability, it is higher, standard deviation is higher, so it did move around. ExxonMobil, the daily returns are volatile. So you could be up, 3% one day, down 3%, a lot of volatility, but on average, it did make more, right? It was up more often, and on average, it did make more. That's why this is higher. All right. Same thing here, very close. Average return was higher, standard deviation was higher, but you earned more return on average for the risk that you took.
Hey, D.
Yeah.
Rob is asking, is there a way to sort this chart with 2 or more criteria? Can I first sort by stock price and then keep that sort while I sort by another input?
Well, there's no two sort, like the sorts won't work with 2 sorts, right? So one column, if you sort one column, it's going to sort by that column. Once you hit another column sort, it'll sort by that. So you can't have 2 simultaneous columns to sort. But you can go.
Can you download this data, or is that not available on this?
So this data, you can do the same thing from the stock screener. I probably don't have enough time, but if you go here to the stock screener, I think you have it. Let me see somewhere here. Average daily stats. So these are like, we were looking at the 15. Here's the 15, 30 days, and 90 days. And you can download this table over here. And you also have the performance here. So you have 2 weeks, 3 months, 6 months, 1 year. All the data is in here. If you wanted to download and then in Excel, use your own parameters. Some of the filters are in here. So you can look at the performance 2 weeks, 3 months, 6 months, and set them up like this. Average daily stats, you could also do it here. Average return, you could even set it above SPY, below SPY. So you do have that option from the stock screen.
Awesome job, D. You're always bringing it. There's a question, you always answer it. That's awesome, my friend.
Awesome. Well, thanks everyone for joining. We're right up against the bell. Everyone stay safe out there. Have a great trading day and hope to see you guys tomorrow.
Great job, D. Trading.